Hey and welcome back to my channel. In this video I'm going to explain why having a good credit score is important, what a credit score even means, and some simple, quick and practical ways that you can improve yours. Please remember to subscribe to this channel. If you enjoyed this video, go back and check my earlier videos for more content on personal finance. Before getting into credit scores, it's probably worth knowing my stance on borrowing. I think debt should be avoided at all costs, except for a mortgage, because who's got the money to buy a house outright? This may feel unrealistic for some people who may have a lot of debt at the moment. In an earlier video, I talk about how I got into credit card debt, and making the decision to pay it off really changed my mindset on money. This kick-started mine and my family's journey into getting out of debt, except for our mortgage. So this includes getting rid of a lease car, getting a second-hand car, and doing things like changing to a SIM-only contract. Now to some people that might seem quite extreme, but actually we did this on a relatively low household income and it's achievable on a strict budget. When you don't have debt, you have more money to spend and invest. So credit scoring is all about predicting future behaviour. It's basically how financially attractive you are to lenders and how much money you could potentially make them. While having a poor credit history counts against you, so does having little to none credit history as well. It makes you less predictable due to the lack of data held on you. Now this fact actually creates a lot of uncertainty among people. A lot of people say, I haven't borrowed money before, so I must be attractive to lenders, but that's just not the case. So let's take a brief look at the history of a credit score. So before computers and algorithms, lenders would need to make a judgment call about a potential borrower based on information they had on them, as well as other information they could get from previous lenders that would give it to them and predict their future behaviour. As this process was done by human beings, there was a lot of potential for mistakes and lenders being out of pocket due to borrowers asking for more money than they can afford to repay. A system needed to be developed to make the decision making more precise and decrease the risk of lending. A metric needed to be developed to categorise borrowers into how risky it would be to lend them money. So in the US in the 1950s, a method of scoring was created by an engineer and mathematician named Earl Isaacs and Bill Fair. This system was called the FICO score. The system proved popular and was also used by insurance companies to evaluate which customers were more likely to make a claim. So over time, this method led to today where more complex algorithms are used. And currently in the UK, there are 3 credit reference agencies that hold information on you. The information used to create a credit score is obtained from one or more of the 3 major credit reference agencies. In the UK, these are Equifax, Experian and TransUnion. Equifax started in the US in 1899 by brothers who would keep a list of good paying customers. Then they sold the list of customers to other people who supplied credit. Experian was founded in 1996 by taking over an existing credit agency. Now Experian handles data from millions of customers and is probably the most well known out of the 3. So TransUnion used to be known as Call Credit, which started out by specialising in data regarding unpaid parking tickets, but recently got into the business of providing credit card authorizations from mobile phones. So all lenders use data from one of these 3 agencies. The important thing to remember here is that your credit score won't be the same with all of these agencies, as they all have slightly different criteria that determines the magic number that they assign you. Although most of the criteria that mean you will have a higher score remain the same, there will be differences in what they determine to be important. So you should check all 3 scores regularly, like 6 months to a year, to keep track and ensure you're heading in the right direction. Which in case there's any confusion, it's up. To illustrate how your scores can differ, I'll put mine on the screen now. Interestingly, lenders don't actually see this score at all, it's just for you. The score you see just reflects what's actually inside your report, which is what lenders will look through when you apply for credit. When you apply for credit, your credit history is a main factor, but it's not the only one. What you actually put on the application form, for example, what your salary is, will also make an impact on the decision from a lender. So what is a credit report versus a credit score? Your credit report and your credit score are different things. Your credit report is the detailed data held on you and your financial behaviour, which I'll go through shortly, and the credit score is just a value assigned by the agencies because, well, people like to know how they're doing. Credit agencies will often sell you a score, but don't do it. You can find out your score for free using free trials, which you can then just cancel or put a reminder in your calendar, or just cancel it straight afterwards. And don't sign up to any consumer credit management products either. It's just the credit reference agencies trying to make more money out of you. So what actually makes up your score? The data that's used to calculate your credit score comes from 4 main sources. So firstly, the electoral roll. This is information which is publicly available that shows where people live. So they also look at court records. They'll be able to check any county court judgments that you may have, any decrees, IVAs, bankruptcies, or any other court debt orders that you may have. They'll also look at previous searches and linked data. So this includes any searches other lenders have done on you, addresses that you are linked to, and people you're financially tied to, for example, if you have a joint account with your partner. And they'll also look at your account data, so any accounts you have open with financial institutions, but also things like mobile phone contracts and energy suppliers will also be available. So the basic credit score range is from 300 to 850, and the higher the number, the less risk the lender is taking. If you have a higher score, you could expect to be offered better interest rates than lower scores. You could expect better deals on mortgages, credit cards, insurance, and also mobile phone contracts. So the model behind the score is actually made up of a few different things. 35% of it is made up of your payment history. Outstanding debts account for 30%. The time you've actually had a file accounts for 15%, credit inquiries are 10%, and the types of credit you have are 10%. So this is the basic model used, although there are other models with some that give you more weight to some sections than others. The other main factors that are involved in making up a credit score are the amount you earn, any debts that you currently have, and your residential status. So add to that your credit history, you'll see that a credit score is actually quite a complicated thing. It's also worth noting that credit scores are not transferable from one country to another. So you may have a good score if you've lived in the USA for a little bit, but when you come back, you're going to have to build up a new credit score, even though the same credit reference agencies may be involved. So before we get to how to improve your score, it is best to see where you're currently at. As you're watching this video, you probably have an interest in your finances, so you may know at least one of the 3 scores, but let's take a look and check all of them. So Experian rates you out of 999. Why it wasn't 1,000, I don't know. So head over to the website experian.co.uk, where they now say you can access your credit score for free forever, which is pretty handy. It takes 2 minutes to fill out the form online and you can access your score almost immediately. To view your Equifax score, head over to clearscore.com. They rate you out of 700 and their service is completely free. Once you sign up, you'll receive an email every single month to update you when your score is ready to be viewed. To find out what your TransUnion score is, use creditkarma.co.uk. They rate you out of 710, which is horrendous for my need for order, but let's go with it. So make a note of all 3 of these scores and use it as a benchmark to know whether you're going up or down. Right, now let's look at 5 tips on how you can improve your credit score. Firstly, you want to check that you're on the electoral roll. This means that you have registered to vote. By doing this, your identity and address will be verified by a pretty reliable source, making it hard for someone to use your identity fraudulently. If you aren't on the electoral roll, head over to the .gov website and have your national insurance number to hand. I'll put a link in the video description below where you can register. So you also want to pay off existing debt. If you have a lot of debt, this looks to a potential lender like you're going to be a risky investment. You may not be able to afford repayments in the future. Now, I advocate having no debt whatsoever, so this tip is a win-win. If you do intend, though, to get credit in the future, keep your debts as low as possible. Pay off your debt using the debt snowball method by paying off your balances from smallest to largest, throwing everything you can at the smallest debt while paying minimum payments on the rest. Once that debt is cleared, move on to the next, and so on. This method utilizes the psychology of quick wins to keep you motivated. If you do have a credit card, which you shouldn't, then keep the balance below 50% of the limit to show that you're in control of your money and not the other way around. This is known as credit utilization. So you also want to limit credit applications. If you apply for a lot of credit in a short space of time, this will cause you to appear desperate. Your chances of being approved of credit will reduce drastically. Try limit it as much as possible and do it once you've done a comparison search somewhere beforehand. Comparison searches will give you a percentage likelihood of whether you'll be accepted for a product or not. Well, they aren't perfect, but it's a good indicator. So if you know you're going to apply for a mortgage in 6 months' time, don't apply for credit beforehand to increase your chances of getting approved. Don't miss payments. This could put you into default and trash your credit score. By not keeping up with payments, you're evidencing that you're just not reliable. Now, this could happen accidentally, in which case, get hold of the company directly, and hopefully you can prevent it from getting onto your credit score and negatively impacting you. However, if you do get to this stage, it probably means that you're struggling financially and that you can't keep up with minimum payments. If this is the case, I would suggest contacting either Citizens Advice, the National Debt Line, or Step Change. Don't bury your head in the sand, get help. Check your credit report for mistakes. As I've already said, you need to regularly check your credit reports. If something on your credit report is wrong and doesn't apply to you, contact the credit reference agency to have your file updated. This could be, for example, if someone's applied for credit in your name and you didn't know about it. Even having just a slightly wrong address on there can affect your score, so make sure you check the details on the report and any incorrect information you need to report straight away. If you are struggling to remove an error with the credit reference agency, you can always make a complaint to the Financial Ombudsman. So to summarize, your credit report is detailed information held about you by credit reference agencies, and your score is just a number assigned to you by them. Whether you like it or not, your credit score is important. You need to check all 3 reports every 6 months to a year by using free trials or free websites. Don't pay expensive monthly fees. If you notice an error, report it to the credit reference agency and ask for it to be removed. If there are any issues, go to the financial ombudsman. Take positive steps to increase your score using the given tips above. This allows you to get the best financial deals available. Don't obsess over the numbers. Just use them as a benchmark and know that you're improving. And like I said before, I'd rather you didn't borrow money. You should be living within your means and buying what you can actually afford. Despite that, having a good credit score is part of life now, and it's needed to get everyday things regardless of your position of borrowing money, and you need to take steps to make sure it's as high as possible. Thank you very much for watching. Please remember to hit the like button. It really helps with the YouTube algorithm, and make sure you subscribe to get more content every single week.